Bitcoin is an incredible store of value. I think that's its primary use case, or its killer value proposition now and probably for the next decade, and maybe forever. But the entire world's looking for a store of value right now, and you have to look across $250 trillion in assets. So if we think that asset inflation is running north of 10%, and I think it is, I think it's pretty clear it is. And if you have capital, you have to choose between bonds, $80 trillion in sovereign debt or corporate debt or municipal debt, or or mortgage-backed securities, or you got to choose equities, tech equity, conventional equity, or you got to go to precious metals, or you go to real estate property. And when you look at all those things, the problem is half of all real estate is impaired because of the political response to COVID. And it's not likely that's going to change in the next 10 years. We probably got 10 years of uncertainty about real estate assets, especially commercial real estate assets. The other challenge is with real estate is the taxes on it. It's illiquid, immobile, and highly taxed. Generally, real estate is taxed annually everywhere, right? It's just a question of whether it's 20 basis points or 200 basis points.
Right.
So that makes real estate a challenging store of value, and that takes you to bonds. And bonds have worked as a store of value when interest rates keep going lower. You can see that everybody that's been on the bond train and benefiting from it, they're screaming as loud as they can they want negative interest rates. Because they're like, the secret to success is lower the interest rates 50 basis points a year or 100 basis points a year, and it's a no-lose proposition for them. But at this point, it's getting kind of ridiculous, silly, because when interest rates go negative, everybody takes their money out of the bank. It creates bank runs. All the bank systems break. It's kind of a morally bankrupt. I mean, a lot of people, they don't really understand that they're being abused at 2% instead of 5%. Yeah. But pretty much everybody can figure out that when you're being billed 1% of the money you have in a bank, you're being abused.
Yeah. And again, if you look at money as that insurance policy on uncertainty, all of a sudden that policy has negative value. Like it's just asinine. It doesn't make any economic sense.
Yeah. So that doesn't work. And so where does that take us? It takes us to equity. We got an equity bubble. It's a very crowded trade. But the real issue with equity as a store of value is that the revenues get taxed as sales tax. The cash flows get taxed as income tax. The expenses, the cost structure gets taxed as employee and payroll tax. Then the trade gets taxed as a tariff. Then you have the existential threat or regulatory risk of onerous regulations. You pick up the paper and see maybe Australia is going to bill Google every time they link to a newspaper article. And then if Google doesn't link to newspaper articles, they're going to get fined for not linking to newspaper articles. And, as these things become more powerful, they become regulated utilities, and politicians start to think that they can and should be regulated. And maybe with good cause, if there's only one provider of information anywhere in the country, then it definitely becomes a political issue. So that's a challenge with equities. Eventually, they might work for 2, 3, 4 years, but they're valued as a multiple of cash flows. So if all of the liquidity in the civilization gets squeezed out of debt, right, when interest gets to zero, the government and the Fed owns all the debt. Okay, they bought me out. Now I got to put it in something else, so I jump on equity. So now equity's double. But now the P to E's double or triple, and the revenue multiples triple. What's the value of an equity? The value of equity should, in theory, be the tangible assets on the balance sheet plus the sum of the discounted cash flows. And so people are using equities as store of value today. right? In fact, you could make the argument that equities are the most popular store of value for the majority, with the Robinhood trading. They're all buying Apple, Amazon, Facebook, NASDAQ, spiders, everybody, even though nobody thinks revenues are going up this year, nobody thinks earnings are going up this year, but equity values are double this year.
Right. Yeah.
So that means that they're getting riskier. So if you contrast Bitcoin to equity, the problem is if the price of an equity goes up by a factor of 10, you've got more risk because it's delaminating from its underlying cash flows and its fundamentals, because it is a centralized regulated entity. And the only way that the cash flows are going to grow into that value is they keep raising the price. And if they're a monopoly and they raise the price, the regulators will react. If they don't raise the price, they can't grow into the multiple. And so you're kind of a chicken and the egg thing, right?
Yeah.
If the price, and if there's any competition and their cash flows deteriorate, eventually you're trading at 200 to 1 or 200 P to E. And then any degree of disappointment causes massive volatility.
Right.
They don't, and how are they different than Bitcoin? Well, Bitcoin's value proposition is the liquidity. It is the store of value. That is it. If you're going to function as money, you want to be a single-celled organism. The simple, like the algae of the ecosystem. The base layer of the ecosystem is plankton or bacteria or single cells. You don't want to be a vertebrate. And these companies are vertebrates with a brain and a backbone. And that means, for example, WeChat or TikTok, it has a headquarters. And if it's in the wrong country, it gets its head chopped off.
Right.
And Apple and Facebook, they're subject to a certain court, a certain country's jurisdiction. So that means they're foreigners somewhere else. They're vertebrates. If you're a vertebrate, I can kill you with a needle, right? Like a human being, I can figure out how to kill, right? There's a heart, I take a needle, I poke there, you're gone. It's very fragile. Hard to do that with a swarm of hornets. Hard to do that with all the plankton in the ocean. Hard to, it's very difficult to do it with an amorphous, decentralized invertebrate of some sort. So if you want to store a value, you don't want a company that's valued based upon the ability to engineer hyper complicated products that have to keep getting upgraded. You want something which is simple, that can just keep being simple.